Mode.
Hey everybody, Preston Bryn here with our weekly roundup brought to you by our trader user group. Really interesting week, but an interesting finish to the week with Aunt B. That would be A.K.A. Janet Yellen and her speech on Friday at Jackson Hole, Wyoming for the Federal Reserve Annual Symposium, Annual Symposium. How appropriate for Jackson Hole, Wyoming, right? I wanted to show you guys something here which just shows you how the communication strategy of the Federal Reserve is so effed up. It just totally blows my mind in how they do this. You can see right here, this wide candle right there. This is a 5-minute chart of the E-mini S&P 500 futures. You can see when she started to speak at 10 o'clock, they released the transcripts to her speech at the same time. And the markets, reacted as they always do. They went down, they went up, trying to find keywords and things within her speech. And then the market settled in. And for the next 30 minutes or so, it went up higher up in this area here. And the market seemed to like what she was saying. We had a little bit of a pullback, but again, the markets were basically a little bit higher going into 11 a.m. over an hour of her speech. They had already read the transcripts. And basically the net of her speech was that, yeah, the markets the U.S. economy is getting a little bit better. There is still some inherent risk globally, but we see an interest rate hike coming, but we're going to have a very low glide path, meaning we're going to be very slow in how we raise the rates. So the markets had digested this information, and price action seemed to indicate we're okay with that. We'll take that. And then no sooner had she wrapped up her speech that right around 11:30, right here, a couple of other knuckleheads with the Feds, mainly Bullard and a few others, got on TV, because these guys, they can't help themselves, and they come out and totally say the opposite of what Yellen said. They came out and said, we see a rate hike coming this year, maybe not even one, possibly 2 rate hikes. So naturally the markets just completely sold off, and we had this complete reversal in the markets. Now, when Yellen was speaking, I like to look at the bond market. I like to look at the US dollar. I like to look at gold, traditional asset classes that really move based on the market's perception of inflation or no inflation, interest rate hike, no interest rate hike, just kind of get a sentiment of the market. And when Yellen was speaking, in fact, towards the end of her speech, gold was down, the dollar was down, and bonds were up. So the market had settled in to the fact that, okay, low glide path, if we do have a rate hike, may not be until the end of this year. In fact, the percentage chance of a rate hike this year has moved up to about 50%, maybe a little bit over 50%, as Janet Yellen was speaking. And then as soon as she finished and these other knuckleheads got on TV and kind of just undid everything that she said and said we could have possibly 2 rate hikes this year, these idiots, then the markets totally sold off. We saw the dollar get a lot stronger, reverse naturally. Bonds completely sold off. And gold didn't take it too well either, but gold is still a little bit confused about the market, like a lot of other traders. And you could see the markets attempted a little bit of a rally, but then we came back down, and then it kind of got choppy as we got into close. And then as we got closer to the closing price here in the markets, you could see here on this 5-minute chart, we attempted a little bit of a rally, but we didn't get too far. Now, we cleared what I consider to be a key pivot on the 2-hour chart. I like to use the 2-hour chart for swing trades because a typical trend will run anywhere from 6 or 7 bars to about 25 bars. And if you do the math on a 2-hour chart, that's anywhere from, a couple of days to maybe about 10 trading days. So that's a really good sweet spot for a 2-hour chart. And I know other people like to use really odd time frames for their charts because, you know, they do the division by the trading day and so forth. But, you know, at the end of the day, it doesn't give you an edge. It really doesn't. I've done the math, I've done back testing, and if you stick with a time frame and you use it over and over, then your trade expectation's not going to be any better or any worse with other time frames. So I find a lot of folly in that. But be that as it may, you can see that we cleared back up above 2165. If I come into the 2-hour chart, I'll show you what I mean here. This was a key pivot on the 2-hour chart, and I'll step it back just a little bit here. You can see here 2165 was this key pivot low. And then, of course, we moved a total of about 30 points. You can see, excuse me, this high point in the bar up here, you know, right around 2187, roughly. And then all the way back down here to 2157 when these knuckleheads got on TV and totally took back everything that Aunt B said. Aunt B got out there to tell us about her recipe with blueberry pie. And I guess the boys didn't like that blueberry pie. They started sticking their fingers in the pie itself. So it just totally, the market's just totally crapped out. So I think the Feds really, and they came out with a Facebook page. Give me a friggin' break. These idiots, these rat brain idiots there, they really need to work on their communication strategy. It's crazy. All right. But one thing we did learn from this is that if the Feds settle down and in the next Fed meeting coming up, Feb 20, or September 2021, I think, and then they communicate another rate hike if they don't do it this September, but before the end of the year, but then there'll be a low glide path. You'll see the markets turn right back around again and start the rally like they did while Janet Yellen was speaking, okay? So that tells me a lot. That should tell you guys a lot. The markets seem to be ready for a low glide path, gradual increase in rates. One rate hike will be fine, get us up to 50 to 75 basis points. The markets are now up to about 63, 62% probability of a rate hike before the end of the year. A lot of market participants don't believe they'll do the hike this next month in September, just because it's right before the presidential election. I don't really care about that. But I think the good news is, assuming the Feds can get their communication strategy in alignment, the markets are ready for a low glide path. Let's do a rate hike. Let's get it out of the way, one and done kind of thing, and then just sit back and let's take this glide path. Then I think the markets will run back up. We'll take out our all-time highs of 2191.50. And then if we come back out to my weekly chart here, as you guys can see, after the Brexit vote, I had said that we would come up probably by November or August the 8th. In fact, we hit it right on at my target. The actual target was the center of this colored bar, which is around 2200. Now, this colored bar is generated on my chart, but it uses a combination of Fibonacci extensions and Gann time extensions to be able to calculate both time and price. And it's saying we're going to run into a lot of resistance up in this level here. So, you know, the resistance level generally runs from around 2185 up to about 2225 area. So I just kind of picked a little bit in the middle, like about 2200. Excuse me. So you can see here, this week was our first week where we got a red candle on the candles for a weekly time frame. Now, if you guys remember last weekend, I said we had 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row. And it's been a long time since we've had 8 green weekly candles. So I said, don't be surprised if we get a pullback. And I would not be surprised if in this pullback, we come back and test the former all-time highs, which is right here at 2134. Because it took us over 400 plus days to take it out to begin with. Coming back and doing a retest of this, to me, it makes sense, right? But anyway, be that as it may, you can see these blue bars coming off the left over here, which basically indicates, these blue bars indicate price action or volume over price. And you can see we're in a heavy volume area right here, and then there's another one sitting just above our opening price for 2016 of 2037.75. I believe we're in the state right now where buyers are willing to step in and buy the dip. In fact, if we can get a little bit more of a pullback, I think you'll see more buyers eagerly come in and scoop this stuff up. So that's a little bit about what I'm seeing here on these charts. But I just thought it was really funny how the Feds communicated at Jackson Hole. I mean, they're idiots. It's totally, I don't know how else to say it. Yellen's got to get a hold of the boys and bring them in a room and just, calm them down, give them a piece of her blueberry pie. But I guess the boys don't want it. But anyway, this is kind of where we're sitting right now on this daily chart. On a daily chart, we did get a signal. In fact, the signal that we got was right on the 15th of August to start shoring up some shorts here. So, are looking at some shorts in the market. But you can see right here, we've got the 50 EMA just floating at 21.39, just above 21.34. So personally, I would like to see it come down and do a retest here. I think it's going to be a little bit choppy. I would love to see a retest before, and I'd be more than willing to come in and pick some things up. In fact, for the day, NASDAQ actually finished in the green. Technologies had a pretty good rotation. And you can see on technology, we did a double test of the 48, 35, 25 highs for this year for the NASDAQ 100 futures. And I don't think there's going to be much of a pullback in NASDAQ. Technology's been very strong. We've had a rotation into technology, so I could see that holding up nicely on any dip that we get. Volatility was very interesting for the day as well. I mean, it followed the price action very closely. It finished almost flat, right? But if we come in and we look at that same 5-minute time frame on volatility, you can just follow Janet Yellen speaking, right? Right in this area here, Janet Yellen came in at 10 o'clock. So I've got my cursor right here on this bar at 10 o'clock when she started speaking and when they released her transcript for her entire speech. And you can see volatility at the beginning of her speech was 1321 in the VIX. And about the time she wrapped up, vol was back down again to about 1254. So it was nice, quiet, calm, peaceful. Yeah, we'll take a rate hike. We know one's coming, but we like your idea of a low glide path and let's just take our time kind of approach. And then those idiots get on TV and go, what glide path? We see 2 this year. And then boom, off we go to the races. And vol went literally complete reversal from the, from Yellen, from a low of 12.15 all the way up to almost 15. I mean, just a huge run. And then obviously it gave some back up into a close here. So these idiots got to get their act together because they say they want to improve their communication to the markets. Well, the best way to improve communication is get everybody on the same goddamn page. Then the markets will be able to handle it a little bit better. So anyway, enough of my bitching about the Fed, but I'm sure a lot of you out there listening to this video would probably concur with what I said. And if Aunt B, you're out there and you happen to be listening to this, then, get a whip, get your boys in a room and beat the hell out of them. Get everybody on the same damn page. All right, enough about that. If we come on with the markets and we look at a couple of other things that we're seeing here, again, bond market, same damn thing. 5-minute chart. You can see right here, bonds started going up at the Yellen speech. Why? Because the bonds were saying, okay, a low glide path, 1 rate hike, interest rates actually went down. And then all of a sudden, boom, when the boys got a little bit crazy, bonds start selling off, interest rates start going up. So that was to be expected, okay, with that happening. Same thing with the US dollar on this 5-minute chart. You can see right here, the dollar starts going down. Not expecting a very, very casual, laid back, stoned out Fed. And then all of a sudden, bam, the dollar just jams straight up. 75 ticks. I mean, just really crazy with what the boys said. So we got some really strong action there. Now, with the British pound, let's go back to the daily chart. The nice thing about the British pound, we were short. I was short the British pound. During the Brexit, we had our members up at 1 and 2 o'clock in the morning, New York City time, as the Brexit poll results were coming in. We were following it poll by poll. And the more the polls came in, the more it showed that they were leaving. We just kept loading up on our shorts in the British pound. And it turned out to be a fairly easy trade. And we just shorted it. We stayed in it all the way down. And then I flipped over right here on the 16th of August to long. And I just took this little bit of a contra bounce right here, and then I got out prior to Yellen because I just didn't know what these idiots were going to do. So, and the pound sold off a little bit. My system seems to indicate that the pound can actually go lower. There's a lot of inherent risk in the pound. However, I'm a contrarian. I believe the markets always overcorrect both to the upside and to the downside. I believe that the pound eventually over the next year or two is going to be a lot higher than where it is here. I think the Brexit scare tactics that a lot of the politicians used were a little bit they were a little bit overindulgent in what they were saying. You know, Britain was going to fall into the sea kind of thing. So I think that's going to be positive, the pound. Now, Carney, who heads up the Bank of England, has come out and said he's willing to do more stimulus if necessary. The pound has already hadn't seen these lows in almost 2 decades. But I do believe that this is just it represents, for a longer term player, you know, 2, 3, 4 years out, a great buying opportunity for the pound. I think Britain's going to come out of this Brexit vote better than people think. Granted, it's going to take a year to sort things out with the trade deals and everything else, but I think the currency is going to come out better than people think. And I think at this low level down here, it represents a great buy. Remember, before the Brexit vote, the #1 economy in the global globally was the U.S., and then #2 was Great Britain, right? So, and then #3 was Germany, if you count Germany as, you know, part of the ECB, because we follow Germany. So this did nothing to sway my vote that Britain is going to just, you know, momentarily, yeah, probably so. A little bit of chop here. But I think longer term, the pound is going to be a really great play. So we're going to be watching that one for sure. The yen is going to be an interesting play too. They just cannot seem to get inflation into their economy. Now they're already talking about, Kuroda, who runs the Bank of Japan, is already talking about doing more stimulus. You can see the yen sold off just because the yen dollar, with the reversal in the Fed boys, the yen sold off pretty good here. I think that if Japan comes out with more stimulus, as they say they will, this will probably move the yen back down to the 0.93 area. This key pivot down in this area here. So selling calls out of the money here with the yen makes sense to me, or FXY, which is the ETF that plays the yen. So these are just a couple of currencies that we're watching here. And then, of course, gold. I mean, it finished flat. It didn't go anywhere. It didn't know whether to shit or go blind. The gold is still a little bit to the downside because they are expecting a rate hike, and that's negative for gold. Yellen did come out and say she expects to see their inflation target of 2% in the next year or two. So that'll be interesting to see how gold reacts to it. But we did take out the key 50 EMA in gold. We've had a solid run for 2016. You can see we're near the 2016 highs. So I think gold is going to come back and settle in before it attempts to make another run. Okay, same thing with silver. Oil, well, this was an easy call here, guys. I mean, I was telling our members that, you know, after we had this huge run up in August, I mean, just huge, up here to about $48, $49 a barrel, I said selling calls out of the money in the oil market makes sense to me. A lot of this run up was attributable to the Saudis, you know, kind of flapping their arms, saying they're going to get together with other OPEC and non-OPEC producing oil countries and try and come up with a production freeze. But it didn't make sense to me because they're already at the highest production levels we've seen So a production freeze at their highest levels really does nothing. And more oil is coming online. So inventory levels are going to continue to stay high. Could we kind of grind around here and grind up a little bit? Possibly, but I just think selling calls out of the money in oil, to me, through the remainder of 2016 makes sense. Okay. And this is also a seasonal weak time for oil as well. Wheat, corn, soybeans in the ag market, you can see here that I had said selling calls up above these prices makes more sense. You can see corn closer to their 2016 lows. You can see wheat very similar. Big sell-off in wheat on Friday. If I can get the chart up here. Let's see if I can't get it on the 2-hour time frame here. Yeah, you can see this huge sell-off in wheat, and we're near our 2016 low right here for wheat. So same thing with wheat. I'm not sure if I can get it back on a daily here. Yeah, here we go. So you can see just how wheat has just really sold off dramatically. So again, selling calls up above the price. And then soybeans, same thing, although soybeans is above their 2016 open price. You can see soybeans is holding up just a little bit better. And then in the soft market, I'm stubbornly short the orange juice, short orange juice here. I just don't see it holding up in this level, guys. I know we've been kind of grinding and chopping around in this area, but I am short orange juice, and I'm also short sugar, which is also stubbornly holding up at these high levels here. In fact, sugar could actually go a little bit higher, and if it does, I'm going to add to my shorts here. So anyway, guys, that's my update for the week. For our members, I will see you this Sunday night, and we will go through what we see coming up for this week. We'll look at some of our secret trader trades. Our accordion fly is working out very nicely. I'll go into more detail on that. For those of you that are not members, I highly encourage you to come in and check us out. We've got a pretty good perspective on the market. We've got a good year for 2016, and I think we're going to have a nice, strong finish. And then we got a couple of really cool things coming up for the end of the year, going into next year, that I think could be great trade opportunities. So if you're not a member, I highly encourage you to come in and check us out. Otherwise, everybody have a great weekend, and I will see you members this coming Sunday evening. Ciao, everybody.